ASTER has quickly become one of the most talked about cryptocurrencies in the market, drawing significant attention from retail investors, traders, and crypto enthusiasts alike. Since its launch, ASTER has experienced an extraordinary surge in value, with some reports claiming growth of over 7,000% from its initial presale price. This meteoric rise has been fueled by a combination of factors, including its listing on Binance, which provided the token with increased liquidity and mass exposure. When a coin secures a major exchange listing, it automatically gains legitimacy in the eyes of traders, and ASTER was no exception. Alongside exchange exposure, large investors, often referred to as whales, have played a crucial role in driving the price upward. A significant portion of ASTER's circulating supply is concentrated in a handful of wallets, giving these holders substantial control over price movements. When whales accumulate tokens strategically, it can create upward momentum in the market, attracting more retail investors who do not realize the inherent volatility that concentrated holdings can bring. The media and social media hype around ASTER has further amplified its popularity, with news coverage, online forums, and influencer endorsements drawing waves of attention and investment. Despite the excitement surrounding ASTER, the token has faced growing scrutiny over potential pump and dump activities. Pump and dump schemes are characterized by artificial inflation of a token's price, often followed by a rapid sell-off, leaving late investors at a loss. In ASTER's case, concerns have emerged from a few key indicators. Firstly, allegations of wash trading have been highlighted on some platforms, where trading activity is artificially inflated without actual market risk. This can create misleading signals of high demand, tricking unsuspecting traders into buying at inflated prices. Secondly, an upcoming token unlock of approximately $360 million worth of ASTER on October 17, 2025, has raised fears that a massive sell-off could occur, potentially causing a sharp 30–50% decline in price. The combination of whale accumulation and imminent token release creates a perfect storm for volatility, which could either trigger further short-term gains for speculative traders or lead to a rapid downturn. Market sentiment also indicates caution, as despite high trading volumes, ASTER's price has shown moments of decline, suggesting that the initial hype might be tapering off and that the market is beginning to question the token's true value. Technical analysis offers a mixed outlook for ASTER. Currently, the relative strength index for SI is approaching overbought levels, indicating that while bullish momentum is present, the risk of a correction is increasing. Moving averages, such as the 7-day simple moving average SMA and exponential moving average EMA, show that the token is still trading above short-term averages, signaling ongoing buying interest. However, price projections based on market trends suggest the possibility of a decline to 1.54 within a few days, representing a potential drop of over 23%. This technical data underscores the volatile nature of ASTER and highlights the risks for traders seeking quick gains. Given the high concentration of supply among a few wallets, the token remains vulnerable to large sell-offs that could disrupt the market and create liquidity challenges for smaller investors attempting to exit positions. Investor sentiment and media influence have played an undeniable role in ASTER's trajectory. Celebrity endorsements, social media hype, and coverage by crypto news outlets have amplified interest, creating a bandwagon effect that has drawn in thousands of retail investors. While this can fuel short-term growth, it also raises concerns that price movements are being driven more by perception than fundamental value. In such an environment, prices can rise rapidly without a sustainable foundation, increasing the likelihood of a dramatic downturn if sentiment shifts. Regulatory scrutiny adds another layer of uncertainty. Authorities around the world have become increasingly vigilant about market manipulation, wash trading, and fraudulent activity in the cryptocurrency sector. ASTER's rapid rise, combined with the high concentration of holdings and unusual trading patterns, may attract regulatory attention. Future regulations could impose stricter requirements on trading practices or reporting, which may impact liquidity and market behavior, further complicating the risk landscape for investors. Ultimately, while ASTER has demonstrated remarkable growth and potential, its future trajectory remains highly uncertain. The combination of whale dominance, media-fueled hype, potential pump and dump activity, and looming token unlocks presents substantial risks alongside opportunities. Investors are advised to approach ASTER cautiously, conducting thorough research and maintaining awareness of market signals. A balanced strategy, careful monitoring of technical indicators, and understanding the broader market sentiment are essential for navigating the volatile dynamics of ASTER. Although the coin's rise has captured attention for its explosive gains, the underlying factors suggest that the potential for a sharp correction or temporary dump is ever present. In conclusion, ASTER exemplifies both the excitement and the risks inherent in cryptocurrency investment. While speculative traders may profit from short-term price movements, long-term investors must weigh the token's fundamentals, market structure, and external regulatory factors before committing significant capital. The story of ASTER serves as a cautionary tale for the crypto community. Rapid growth can generate massive interest and profits, but it can also create conditions ripe for sudden downturns, highlighting the critical importance of informed, measured investment decisions in an unpredictable market. As ASTER's meteoric rise captured the attention of investors worldwide, market dynamics revealed an underlying tension between hype and sustainability. The token's rapid price appreciation drew in thousands of retail traders eager to catch the wave, often without a full understanding of the market structure. Many new investors were driven by fear of missing out FOMO, a powerful psychological phenomenon that can push markets to unsustainable levels. FOMO-driven buying often inflates prices beyond the token's intrinsic value, creating a bubble prone to sudden bursts. In ASTER's case, the combination of exchange listings, whale activity, and social media hype created the perfect environment for speculative mania, but it also increased the likelihood of abrupt corrections if sentiment shifted. The volatility observed in ASTER reflects not only market speculation but also the fragile foundations upon which many new tokens rise, emphasizing the need for investor awareness and careful decision-making. Another critical factor influencing ASTER's trajectory is the role of whales, or large token holders, in shaping price movements. Whales possess the ability to significantly impact market liquidity and price direction by buying or selling large quantities of tokens. In ASTER's ecosystem, a few addresses control a substantial percentage of the circulating supply, meaning that even modest trades by these holders can trigger significant price swings. This concentration creates both opportunity and risk. On one hand, whales can help stabilize prices during periods of panic. On the other, their coordinated sell-offs could result in dramatic dumps, leaving smaller investors exposed to losses. Understanding the distribution of supply and the behavior of whales is therefore crucial for anyone participating in ASTER trading, as these factors often dictate the short-term direction of the market more than broader economic or technological fundamentals. Technical analysis provides further insight into ASTER's potential future movements. Indicators such as the Relative Strength Index (RSI), moving averages, and historical price patterns suggest a market on the edge. With the RSI nearing overbought levels, the token may face a short-term correction as traders take profits. Simultaneously, moving averages indicate bullish momentum in the immediate term, reflecting continued interest from momentum traders. However, market analysts caution that technical indicators alone cannot predict sudden, whale-driven sell-offs or the psychological impacts of media hype and social sentiment. Combining technical analysis with an understanding of macro trends, token distribution, and investor psychology offers a more holistic view of ASTER's volatility and potential risks, helping investors make informed decisions rather than reacting solely to price swings. Investor psychology and media influence cannot be overstated when analyzing ASTER's pump and dump potential. Social media platforms, celebrity endorsements, and news coverage play an instrumental role in driving investor behavior, often amplifying emotional responses over rational analysis. For ASTER, news of its massive gains, Binance listing, and high-profile endorsements created a feedback loop, where media coverage drove buying, which in turn generated more headlines. While such hype can sustain rapid growth, it also introduces fragility into the market. A single negative report or shift in sentiment can trigger widespread panic selling. This pattern, often seen in high volatility tokens, underscores the dual-edged nature of media influence in crypto markets, highlighting the importance of critically evaluating information before making investment decisions. Finally, regulatory oversight remains a critical consideration for ASTER's long-term viability. With global authorities increasingly focused on cryptocurrency market integrity, tokens exhibiting extreme volatility or concentrated holdings are often subject to scrutiny. Regulatory bodies may investigate practices such as wash trading, market manipulation, or misleading promotional activity. ASTER's rapid price surge, concentrated whale holdings, and sudden token unlocks make it a likely candidate for such scrutiny. Investors must factor in the possibility that regulatory interventions could impact liquidity, trading practices, or token value. While ASTER presents opportunities for significant short-term gains, these risks illustrate the broader challenges faced by speculative cryptocurrencies, reminding traders and investors alike that market exuberance should be balanced with due diligence, risk management, and an awareness of potential regulatory consequences.